Welcome back to another episode. Today, I want to take a closer look at some really quick updates impacting AMD and CoreWeave. But more importantly, this episode is going to be focused on Gitlab. The company recently reported earnings and the stock was down roughly 10%. We also do have Oracle that reported after hours today and the stock is up roughly 7.5%. So I want to take a closer look at all that. So let's get started.
I want to thank The Motley Fool for sponsoring this video and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first let's start off with AMD. The first thing is tomorrow we do have our AMD AI event, and I'm pretty excited about this. I do believe in forms of expectations, the most important thing is to get a big customer coming out here and showcasing for the MI350. Throughout previous earnings and previous conferences, AMD's management has really talked up the MI350 and has really talked up the growth in customer base. So I do believe we should expect to see a big name in the cloud server providing market, either being your Amazon, maybe your Google, or someone around those ranges, and kind of get that in the stage and get them in stage. I also hope and expect to see Meta platforms and Microsoft still buying plenty of AMD's MI350. I believe if we don't get any form of reoccurring users like Microsoft and Meta, then it could create some negative reaction. So you want to see an addition of new customers, so someone big, and you also don't want a reduction of any major customers. So that's going to be the thing I'm going to be watching for AMD tomorrow. I will be live streaming with Neil, so make sure to stay tuned to the channel. Next, I also heard reports that AMD Saudi Arabia looking in AI build out, tap Cisco and AMD for cloud projects. So this is kind of floating around. Originally, the stock was kind of up on that news, but then it kind of pulled back. So I wonder if there's some correction here. Maybe it might also be some old news happening, as we did see during the Middle East announcement that AMD had made some announcements about AI investments already. So I couldn't get too much information here, but that is something that came in after hours. Now, the next stock I want to take a closer look at is CoreWeave. So CoreWeave is up about 3% after hours. The main reason is about a day ago, I think we talked about CoreWeave to offer, or we saw that Google was going to offer clouding solutions to OpenAI. Now, there are new reports with this, or rumors, I don't know how we can say it, that CoreWeave is going to offer compute capacity in Google's new cloud deal with OpenAI, sources say. So what's going to happen is Google Cloud wanted to increase their overall AI capacity. So in reports, they're working here with CoreWeave. I mean, if we remember in earnings for CoreWeave, they did mention that they have a new hyperscale cloud provider customer. And there were rumors based on what we kind of saw in their website. I'm pretty sure if we go to CoreWeave's website, you will see Google on the list of customers. I think right here. So we see Google, we see OpenAI. So now it seems like Google needed this extra capacity and OpenAI needed some extra capacity, so it's going there with Google Cloud. It's pretty interesting how this market is working, but again, it just continues to show the massive demand there is for AI solutions and for AI infrastructure. And if you don't believe me, wait till we look at Oracle's earnings. That was insane in forms of what they're seeing with AI capacity. Now, I want to move on to Gitlab, but before, if you are enjoying the episode, make sure to hit the thumbs up, make sure to hit the subscribe button. I'm trying to hit 75,000 subs by the end of the year, and I don't think you're going to get this in-depth AI semiconductor cloud news anywhere else. So make sure to hit the thumbs up and the subscribe button. Check out my special offer at finchat.io/Jose and also at fool.com/Jose. Those would be some great ways to kind of support the channel. And finally, check out my free newsletter, whatthechip.happened.com. So Gitlab, the stock is down roughly 10.6% on the day. It was down a little bit more before the market opened. I think when the market opened, it was down roughly like 13%. So let me say that earnings itself, too long don't watch, were great. I didn't think there was anything scary. I think the company did provide maybe some warning signs that I don't believe were any company specific warning signs, but just an overall warning signs, and investors were not a fan of that. So down 10%. I am going to say I do like it at these price points, and I wouldn't mind adding more and more to my position. So I do have some charts here that I pulled up from FinChat. And first, I kind of want to just look at this company's overall balance sheet. So first, what we are seeing is the red here is cash from operations, and the blue is free cash flow. So this company does have positive free cash flow, positive cash flow from operations. Now in the orange, that is this company's cash and short-term investments, over $1.1 billion here in the most recent quarter. Now, I also wanted to look at their form of debt. Total liabilities is about $600 million. So you might say, Jose, this company has a lot of debt based on that cash and short-term investment, even though it's net positive. But to be honest, nearly $500 million of that $600 million comes from unearned revenue or deferred revenue. So in reality, this company has no long-term debt, no real debt. It's more kind of like accounts receivable, accounts payables that they owe, or stuff like that in the short term of things. But this is a company with an amazing balance sheet. Some other things I wanted to look at is kind of their revenue. Revenue has been growing sequentially, which is pretty impressive. And I want to say their stock-based compensation is not as heavy, especially since this company is free cash flow positive. Even if you kind of subtract this with their free cash flow, the company will still be cash flow from operation positive and free cash flow positive as well. The final thing is, even though their dollar-based net retention rate is decreasing a bit compared to prior quarter, 122% is still amazing in my opinion. Now, I want to showcase what I have for earnings. And again, check out whatthechiphappened.com. Revenue quarter one sales were up 27% to 214 million. Unfortunately, even though they did have a nice beat in revenue, they did not change their fiscal year 2026 outlook. And this could be seen as, hey, if you beat right now, it's maybe expecting, since you're not changing, that you might see some slowdown later on throughout the year. So that created some fear. We talked about that amazing free cash flow margins right now, about 49%. Some is driven by some backlog timing, but overall, we see the company sitting at $1.1 billion in cash. They are seeing great momentum in their Duo, which is kind of their AI solution. We have AI chat and code suggestions with their applications. And also they're seeing kind of great results from the betas that they have on the enterprise side. Now, again, I liked a lot of the things. The only thing that was maybe a little bit bearish for the stocks were, one, that guidance for fiscal year did not change at all, even though the company performed really well this quarter. And typically you would say, if you outperform the quarter, then in theory, you should increase your full year guidance, but the company did not. So that's creating some form of why is that happening? The second bearish flag is the company did mention, with all the AI tools right now, that management knows customers are buying multiple tools to compare. So obviously seeing that, hey, look, there is competition out there is scaring some investors. But I do believe right now that Gitlab has some strong solutions, and we're seeing it really well with the business at the moment. Now, again, I like it. I don't mind buying more at these levels. It's already a nice position in my overall portfolio. I'm not too down for my cost basis. So even if I dollar cost average down, it really won't impact me that much. And at $43, I really like this. I think anything below 50, this is a great stock, as a great growth software play. And as a growth play, you also always come with some of that risk and some of that volatility. So now let's move on here to Oracle. And Oracle is up about 8%. The first thing I want to kind of just showcase is kind of their infrastructure cloud service and licensing support revenue. It continues to see a nice sequential growth. This is an AI story that has started and has been starting for a long time. The main reason is, if you've been following this channel, this should be to no one's surprise, right? We've talked about Oracle for nearly a year and a half already, when this company was sitting at $100. I'm really excited. We even purchased some more here during the crash. This was one of those stocks I talked about in my portfolio update that I recently added to in the 130s. Now we're sitting here in the 180s. Pretty excited. So with Oracle, we can see the following. Quarter four RPO is up 41% year over year to 138 billion. Cloud revenue, which includes infrastructure as a service and SaaS, was up 27%. Cloud infrastructure was up 52%. Now, they mentioned fiscal year 2025 was a very good year for them, which they just finished, but they believe fiscal year 2026 will be even better as revenue growth rates will be dramatically higher. They expect total cloud growth rate application plus infrastructure will increase from 24% in fiscal year of 2025 to 40% in fiscal year of 2026. So that's crazy. That's a massive growth rate. And remember, now you're starting from a bigger base. You grew already 24% in fiscal year 2025, so you're already starting from a bigger base, and you expect that to grow 40%. Insane. They mentioned cloud infrastructure growth rate is expected to increase from 50% in fiscal year 2025 to over 70%. And RPO is likely to grow more than 100% in fiscal year 2026. Oracle is well on its way to be not only the world's largest cloud application company, but also one of the world's largest cloud infrastructure company. They also expect OCI, Oracle Cloud Infrastructure Consumption Revenue, to grow even faster in fiscal year 2026. And OCI revenue growth are skyrocketing, so is demand. Now I'm pulling up their transcript here on finchat.io, and I highlighted some important information that we already we kind of didn't talk about yet. So first, they expect fiscal year of 2026 capex will be higher at over $25 billion as they work to meet the demand for their overall backlog. $25 billion, it's insane. They actually talk about it in their Q&A session that this number is actually a little bit conservative. And if they have the opportunity to buy way more AI chips, as this is where their capex is all going, it's mainly going on AI chips, they will actually be able to increase this capital expenditure. So I know it's not an NVIDIA episode, but let's bring it back to NVIDIA. $25 billion. These are some crazy numbers, and it could be a lot higher. They also expect revenue to be at least $67 billion, up 16% in constant currency, up more than $1 billion from their prior guidance. And RPO is likely to grow more than 100% in fiscal year of 2026. And lastly, they expect that they will exceed the revenue growth targets they previously provided for fiscal year of 2027. And beyond fiscal year of 2027, they are even more confident in their ability to meet and likely exceed all of their previously provided expectations. So this company is coming guns blazing with the overall excitement of AI infrastructure, and they will build and operate more cloud infrastructure data centers than all of their cloud infrastructure competitors combined. So again, Larry and Sarah, I believe, is the CEO, are not playing around. I do believe this is well deserved. This company has done amazing in this AI race. They are still in a position where their supply is not meeting demand when it comes to AI infrastructure. They are actually currently still waving off customers from or scheduling them out into the future so that they have enough supply to meet demand. This is a situation that they have not seen in history, and the numbers themselves are so enormous. They even talk about kind of a company that came out and say, hey, look, we recently got an order that said, we'll take all the capacity you have, wherever it is. It could be in Europe, could be in Asia. We'll take everything. I mean, we never got an order like that. The demand is astronomical. So overall, Oracle is just pretty much being the ultimate bull factor for this AI story. And this is something that we have talked about in this channel nonstop. The AI story is just getting started. So if you don't want to miss more news like this, make sure to join the channel. Make sure to subscribe. Check out the newsletter. Check out the stuff that I have in the pinned comment. Special offers and some stuff are free. Now, would I buy Oracle at these levels? No. I mean, I was pretty excited to buy during the downturn. Right now, if I was to buy, it would be very small dollar cost average. What I am pretty excited about tomorrow is AMD, and AMD is still looking pretty attractive to me. If one of the companies that we talked about four, so two out of the companies I wouldn't mind buying right now, and that would be AMD and Gitlab. CoreWeave and Oracle. CoreWeave definitely not at these levels. Oracle would be very, very small dollar cost average. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.